Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday. Today, we're talking hydrogen, but not the kind that fills policy papers or glossy investor decks. I mean white hydrogen, natural geological hydrogen that seeps straight out of the earth. In energy circles, hydrogen has become, kind of a talisman. And why wouldn't we love the idea? If you could burn something that's emissions or water, that's the holy grail. That'd be wonderful. Whether you're an environmentalist or not, I think it sounds like an astounding idea. We hear about green hydrogen from electrolysis, blue hydrogen from gas plus carbon capture. That's an endless debate that has also had not as much delivery as we'd like. But white hydrogen, that's the wild card. It isn't produced, it's discovered, and it's certainly in one place, it's replacing itself. Still, between that promise and reality, there is a canyon. And our job tonight is to cross it, look at some of the data, and review it a bit more thoroughly. I'm doing this under the backdrop of incredible things happening in gold right now. I just want to throw it out there. I'd be remiss not to say our drill sheets are looking very strong, and some of the companies that have scored very high are looking exceptionally attractive today, the last few days. And we're exceptionally excited about that. So make sure you reach out to us if you're a subscriber. We're happy to set up a Zoom with you. Send me an email at andrew@themarketmindset.ca as well, because there are some very strong opportunities right now. I'll leave that with the gold discussion because we love to talk about gold, but I wanted to also cover hydrogen because it's important. We cover all things extractive. not just out of the frame of a green agenda or anything of that notion. We'd like to remove all the politics on both sides, from the wildly promotional net zero type of idea, which I don't support or get behind, to the flip side of it's all a complete scam. In between those two huge factions of discussion on the far ends, the reality is a middle ground that has to be discussed within the context of economics and world politics. And just like any other extractive, like when we talk about battery metals or any type of mining, believe me, the political ideology plays just as much of a role as does the science idea. So now, why hydrogen? Why does it even matter? So global hydrogen demand is about 100 million tons a year, most of it for refining, fertilizer, other chemicals. Certainly nothing that you'd be that jumping up and down excited about. It's not the headline news. Almost all of it now comes from natural gas. This is some of that from what we call blue hydrogen, and they would consider that still dirty. I consider it pragmatic and realistic and cleaner. Once again, depending on which side of the table you are, if you're a net zero, then you call it dirty. If you're pragmatic and you believe in technological advancement and striving forward, it's clean or cleaner. Right now, it uses today's gas infrastructure while cutting most of the carbon. The only reason it's controversial is ideological. It's not thermodynamics. The molecules don't care if you capture the carbon because you used a wind turbine or a reformer. They only care that you actually captured it. And that, once again, is how you distinguish between when people talk about the hoax or the scam or this, that, and all that. This is the nuance of it, is that if you're capturing it and storing it and removing it, why should you care? You've removed it. You've removed the problem that you're saying is a problem. It's removed. And this is where the devil's in the details when you talk about any of these ideologies. And once again, it doesn't mean that the whole thing's a scam, that there's this, but it's when you come down to these types of discussions, people start to realize the truth, the reality, the data, that the narrative and the story falls apart, and the reality hits people harder. Now, governments are throwing billions at alternatives, but electrolysis is also expensive, and carbon capture, blue hydrogen, it hasn't scaled yet. That's why natural hydrogen, if it can be produced economically, is the disruptor. It is the talisman or the holy grail. And the U.S. Department of Energy, through, I believe it's ARPA-E, here we go, ARPA-E, Department of Energy. They're the oversight committee or technical board that's used to look at funding and helping research for any of these companies that are in that space. This is, many different types of programs out there in the Department of Energy. We speak about many of them in mining, but this one certainly is a very firm framework for working with the government in order to meet expectations or to help them out to do a lot of the research. And that's important because this R&D is not cheap. And once again, finding pathways for blue hydrogen is great. That's going to take economics and further technological breakthroughs. That's a holding pattern. I think it's strong because if you can carbon capture, and we have been doing the West, you see emissions declining while the East, they are skyrocketing. That's important. And that's a narrative that people have to understand, that it isn't that the West is causing all this damage. That's not true. They're actually reducing emissions while who's overtaking? Everybody else. And that's fine. Once again, if your ideology is, well, we need to give the third world and developing countries the ability to pollute as much as they want so they can raise up their standard of living, that's an argument. That's the kind of equality Marxist argument. And that's fine. That's a fair argument. It's an economic argument that you could debate. But it's phrased under more of this, the West is causing problems in the East, and that's not true. Factually, that's not at all true. And that's important as a framework because all the technology developments are coming from the West, and we should be. We have a strength there. Great minds, not only in Canada. I mean, we're not using them as well as we should, but certainly in the States. People come to the States because they know that they got funding, that there's capital markets to discover, whereas they don't find that in other places. And also, we're willing to take some risks. We're willing to help make these changes. And I think a lot of credit needs to be put, even under administrations you don't like, because Biden really wants hydrogen to work. I would even say that Trump does if it can work. But the problem is the economics. Now, this isn't a race to who can drill first. That's not really what it is. It's who can prove physics and flow. And that's what really separates the science from the overall narrative. Now, let's focus on the white hydrogen story, because this would be, people would say, yeah, you're maybe not quite the equivalent of cold fusion or something like that, but it's a holy grail. It would be a significant leap forward in economics and in scale if you could find enough deposits and they were economic and could go to scale. Which once again, does it have the flow? Does it have the physics and flow in order to operate at a large scale? We want to understand then, how does hydrogen occur or form naturally underground? It's mostly chemistry. Water meets iron-rich rock deep in the crust. The reaction strips hydrogen from water molecules, creating molecular hydrogen gas, H2. This happens during a process called serpentinization. People will laugh at me. I obviously could tell I'm not a geo. Serpentinization. It'll take me a while to get used to that one, which literally means olivine into serpentine rock. Another source is radiolysis. Once again, bad punctuation or pronunciation, where natural radiation breaks down water molecules. And in both cases, hydrogen can accumulate if there's geology, if there's a trap there, the ones that would hold natural gas, then you have something very interesting. Now, the most interesting and real life, so it's not theory, instances of that is in Mali, where a village well actually caught fire in the 80s. And scientists later discovered it was 98% hydrogen. Now, subsequent drilling has showed that gas was recharging over time. So it's not a fossil fuel, which is a misnomer in any event anyway, but it's an active, ongoing chemical process and geological process. That's fascinating. We wanted to bring this up because we have a couple hydrogen companies that we keep an eye on, that we talk to, and that we like. And that, once again, shifts the goalpost dramatically. If you've got a natural, self-renewing geological process that's creating hydrogen, once again, it's not from the fossils, the fuel of dinosaurs kind of narrative, or from oil and gas, where the vast majority is plankton and whatnot, under pressure for millions of years. This is naturally self-renewing, of course. Now let's get away from. Let me just bring up. There's this here. Hydroma is the project in Mali, but I wanted to bring up this here. So this is what this is being based off of. This scientific report, characterizations of spontaneously recharging natural hydrogen. I won't go on with that. We're not on here to read science papers, but I wanted to show you that yes, it's a real scientific paper. There's a lot of optimism and lots of assumptions in there, but it does have credible science, and they're obviously spending a lot of time and focus on it. There's other instances in France, and there's some in North America here as well, which we're going to allude to and speak about. The United States is in the game through this ARPA-E, I think it's called ARPA-E GEO-H2 initiative. 8 states, multiple national labs, Cornell University, New England Research, and others developing to stimulate hydrogen production. In other words, speed up the same reactions in the way nature does already. So they're studying to see, well, can we do the same process outside? Of course, very early. These are very early projects, what engineers call technology readiness level 1, 2, or 3. Think lab, like a lab bench, maybe scale field tests, not commercial wells, but the money signals serious intent. And once again, you've got companies that we've talked to that are out there. Like we'll have Element 1 Hydrogen on tomorrow, early stage. They partner with Cornell. They have ARPA-E funding as well, and they're in this ecosystem, and they're building a scientifically credible story, along with some investor hype, of course. But they're backing of strong science to look at some of the projects they have. And why is that worth paying attention to? Because this is cutting edge. It's very exciting. If they can get this, and once again, if and to scale, this becomes a game changer. This is not unlike, we just put out an article, CATL or CATL, their new sodium ion battery, which is going to shift and change a lot of the critical metals story. This is not unlike that. It shifts it. It doesn't mean it's over. It just means that the requirement for these batteries, these sodium ion, means no lithium, no cobalt, no nickel. That's a big deal for those types of companies. Doesn't change uranium, doesn't change copper, doesn't change silver, doesn't change the other critical metals, but it does change some. And also, once again, as we mentioned in that article, the timeframes on that and to commercial and to bigger scale are far out. So it doesn't solve the immediate need and the immediate expansions, but it just shows that yes, technology can come along and shift the metrics, and in both cases in a very positive way. Maybe not for specific companies, but overall, for the overall narrative, for the overall advancement, it's great to have extra tools, and that would rely on less critical metals. We don't have enough. We've gone through that a million times. The same is true with a lot of gases. People will talk about peak oil and gas that they have for quite some time. I think it's safe to say we've burned a lot of it, and whatever side you are on that discussion, getting off of it, even if you desperately wanted to, will take an exceptionally long period of time. Oil is in everything. This is the reality and the fact of life. But once again, as mentioned, the West has been decreasing dramatically the emissions while producing more, which is what you want to see. Now, the hard reality, and that's the economics. And why does that matter? Well, of course it matters. You can't just always just run negative projects that never earn anything, don't generate revenue, and are just a cost. It doesn't matter what spectrum you are in the world. It's just not realistic. It just can't be done. It's not sustainable. It isn't sustainable for any country or any place on earth. Even if you can print the money, we see, that's a constant theme here where we talk about countries printing money, even if it's for a good cause. And even if you fully believed in it, if you start printing money and just dishing them out all on research that don't come to fruition, you're setting the stage for defaults, for credit crisis, for immeasurable and sometimes measurable issues that are contorted together. This is why also we discuss all of these different factors when we're talking about equity, junior mining equity, or junior extractive equity, because a lot of people don't realize all of it is tied together. It all matters. All of it. You think it's just a stock, but it isn't. It's policy, it's timeframes, it's what's the overall narrative, and then there's the milestones to make it happen. For us to have all of these AI data centers, we go into depth in articles about that. And once again, not to go off topic, but just to show it isn't just as simple as when we look at the stock market, you see $100 billion deal for NVIDIA, $500 billion deal here and there. That's the highest levels of big money throwing things around. And believe me, there's enough interesting issues happening with that. But we have to look at from a really structural, most of the world and most business, which is not at that elevated, major headline news theme. Hydrogen is a beautiful molecule, but often and also currently a terrible business model so far. Green hydrogen costs about $4 to $6 a kilo today. Blue hydrogen is cheaper, but once again, it's politically tough because people have boxed themselves into a corner where they said, we want net zero. Instead of looking at the reality and the science, they've created a narrative around it where they're still saying this is contentious. And there is studies back and forth. We're not going to get into the details of that because you can find studies for anything nowadays. But there are good arguments on both sides. So to be fair, white hydrogen, though, the challenge isn't so far not necessarily finding it. It is that ability to produce it cheaply and steadily. The cost stack like this, between drilling, testing, gas separation, compression, storage, the membranes to help storage. Hydrogen is very small, not unlike helium. It leaks. All gases leak. Once again, lots of incredible work being done in graphene and all sorts of different types of nanotech and chemical bonding, and AI is helping with all of that. Incredible, but that's an extra added cost, and it's all of the science coming together at the same time. And commercial application for new designs usually takes 10 years. I think we're going to cut that down a lot. I think AI is going to help with that. And certainly there's lots of indications as far as getting metals and gases and minerals. They're really trying to shorten that lifespan as well. But that's still a hurdle in the quote unquote West compared to if you live in China, India, where you can just do a project. And that, believe me, that is an issue. And it isn't that it isn't being done. So if you are an environmentalist and you're green and you believe in wealth transfer and everything else, that is happening. You're getting your way, and it will happen regardless. They're meeting the lowest benchmark and standard for the world that needs to meet, and they're having projects go. It's why companies like Brookfield aren't interested in Canada. They can go do projects elsewhere and get them done. They know that they've set up themselves in Canada where it'll be tried to be stopped every step of the way. And even the current government, although kind of saying we want to do some projects, the guy who is chairman of Brookfield isn't even coming in. Like they're not even interested. So politics, make no mistakes, plays a bigger factor than any science or evidence or data. Now, we brought up the McKinsey, and once again, not that McKinsey is a benchmark for anything. I mean, they're arguably a very strong and great firm that does some good research. Also, they've got their issues as well, but it's a big name. It's kind of like when we refer to Merrill Lynch or Goldman Sachs, not because I worked at Merrill and I'm trying to promote them in any way, shape, or form, but these are major players on a world scale. That's information and reports carry a lot of weight. And the Hydrogen Council and McKinsey, according to them, they see $750 of U.S. funding of hydrogen projects have been announced for up to 2030, but only about $30 billion that has been reached a final investment decision. That's a bad metric. That's not great. It's a lot of money pledged, a lot of money towards projects, and only, so what is that, 1/10? Not quite. 1 out of 8 projects has hit a final investment decision. Recent assessment by the GIIA back in 2024 says that only $38 billion of clean hydrogen production investment is firmly committed, while announcements are big. And then we alluded to this with the whole AI data center infrastructure, hundreds of billions, trillions. Fermi, OpenAI and ChatGPT along with NVIDIA, massive rollouts. How many will actually get done? It's important. Which ones are economic? Which ones are feasible? High costs remain a major barrier. So for example, hydrogen produced via renewables plus electrolysis, very expensive. You can liken that to the data centers that if you wanted a closed loop water system, you're adding on hundreds of millions of dollars in capex right up front. Infrastructure risk, policy, regulatory uncertainty. The offtake, buyer commitment becomes an issue, but policy and regulatory uncertainty is a big deal. If you are moving a large project, say it was a hydrogen project or say it was a data center near a small town, certainly with the data center, your costs in that small town for energy are skyrocketing. That's not fun because these aren't major cities that can absorb a lot of costs with a lot of people going, wait a second, I'm stretched right now anyway, and you want me to pay way more for energy. Wasn't this supposed to bring money to my small town? And it will to some extent. But some of these major projects, they're not employing tons of people. Like once again, a lot of these new projects are going to be automated. It's going to be a lot of robotics. It's going to be very efficient. It's going to generate a lot of wealth, and a lot of GDP, but it's not going to trickle down in a lot of cases. This is a big problem with a lot of this new model moving forward. And when you have a municipality and a city saying, well, wait a second, how does this actually benefit me? And are large language models actually changing my life in a material financial way? I mean, they are amazing. They're a lot of fun as well. They're incredible, place for someone like me who's curious. If I want to learn about anything, I can just go chat with it for hours and show me which report, point me in the right direction. And of course, they're not perfect, and this isn't about how well large language models are, but the general public needs to know, you're talking about all this productivity, and there is, but how am I making money? How is it making my life easier in the sense that you're going to ease the cost of living? And that is a metric, believe me. But when we're looking at these, we need to look then at white hydrogen and at what this holy grail. And if we're going to look at it seriously, is we need to know two major things. Now, of course, any analyst will say, Andrew, that's 50. but let's keep it simple. We're going to need to know, one, flow stability. Can a well produce a consistent rate over weeks, not hours, like long term? Two, the separation efficiency. How much energy is required to clean that gas to 99.9% hydrogen? Those are, I would really say, the optimal first two things that one needs to talk about to close that economics question. And we're not talking about the optimism and the hopium or whatnot, but those are the two major things I would say at this point. So what does that look like? Well, we've got a metric. I won't bore you with it, but you'd be looking at stabilized flow test with pressure, chemical assays of gas compositions, field separation results, all these types of things. We've built out a model that helps, but I'd be remiss to not talk about one or two projects here. And here's one, Louisiana Clean Energy Complex. This is Air Products. I bring this up because it was a multi-billion-dollar blue hydrogen project, U.S. Gulf Coast, originally slated for 1,700 tons a day of hydrogen production, leveraging a large hydrogen pipeline and ammonia export. The project has been delayed, moved from 2026 up to late 2028, maybe early 2029, while scaling back its ambitious and seeking to divest parts of this project. Key drivers in the securing, regarding this project was securing firm offtake agreements and market demand uncertainty, high cost structure, regulatory risks, lesson for investors, even projects backed by major industrial players. Even when WEF, the EU, the UN is throwing hundreds of billions at things, that doesn't mean it's going to work. I would almost hearken that when it comes down that pipeline and not to the open markets that are going to be the gavel or the deciding factor, you run into issues. If you're trying to force an ideology and make it work, there can be problems. But make no mistake, for those that are ideologically inclined, it would be the same narrative that I'd be saying as far as the space race or weapons manufacturing, needing to be the strongest kid on the block if you want to own the money press. It's the same framing of AI. If from the current administration, we need to win this AI race, or else the world is over. It'll look different for sure. And that's the exact same narrative as far as the green agenda as well, is that if we don't spend tons of money at this, we have significant issues. And it's true. We need to get things cleaner. So it's not that argument. I'm just kind of taking both sides so people can see how the framing does matter and why it's okay sometimes to spend the money, because you need to spend it on R&D. And once again, I'm not picking on this project in any way, shape, or form, but we're just bringing it up to show that there is an implementation gap. And some of it is also, once again, their own, use that term, the left eating itself. It's their own ideology eating itself. They don't want it to be that it's cleaner or that they can store the carbon. A lot of people want it to be that it doesn't create any. And not only that, a lot of them they just don't want extractive services anymore. And you say, well, that's not realistic. And this is where it's important for us to look at the ideology away from what's the reality. And this is all important because we'll just touch back on this hydroma. This is the one in Mali. And once again, not asking you, we're not going to go through this. I don't, certainly don't work with hydroma and I have no vested interest in it, but it is fascinating. And we're going to keep an eye on it because this is a potential game changer that they are currently working on that would change the game and would make a significant difference. And I mean, just let's put this into context again. To have a source of hydrogen that seems to be replenishing itself naturally through a chemical and geological process, at what rate? We need to, let's slow down. I don't want to say it's fully doing it and it's just constant, but if it was at a decent rate, at a decent flow rate, then you could harness this, that you're taking out and renewing at the same speed. That would be the goal. Of course, a lot of scientists will say, Andrew, you're wishful thinking. That's fine. That's how we position it for the time being. But we're doing this under the backdrop that there are companies here. And I mentioned we're going to have Element 1 Hydrogen, which is very new. And they're connected to Cornell as well as ARPA-E. They're working with them, doing the science, looking at their projects, because it's important. These are things that no matter what side of the argument you are or belief structure you are, if you can figure this one out and you could bring hydrogen onto scale and it's economic, that should be a win for everyone. If it burns and you get left with water, that's awesome. Like, I don't care if you don't believe in the climate narrative, you don't have to. It just means that if your air is just a bit cleaner, isn't that cooler? To me, it's very simple. You don't have to get down to the politics of it. But if it is, and once again, a lot of ifs here, and if it is replenishing and if it is economic and at scale, awesome. That's very cool. I think it's great. Now, once again, that's a lot of ifs, and we're going to get to ask some of the tough questions tomorrow. But this is where, we really have to narrow down and clear out some of the fog, physics versus ideology. This is, or I would say, and I'm going to get in trouble again for this, physics versus the science, or data versus the science. People who usually say the science tend not to know what the scientific model is, the process, and they think that by saying the science, it is a fact of something. And we need to remind people that science is a model. It's a way of thinking. It's putting a hypothesis, testing that thesis, and then having a result that's either confirming or negating that. It doesn't mean that the science it's true. It might prove something negative, but it's that we're constantly asking questions and testing. That's what makes science or physics or biology so critical and important, is that you're supposed to ask questions. And if you're having an administration or a policy or a person tell you stop asking questions, then you're dealing with an ideology. You're dealing with I hate to say it, a psyop. You're dealing with something else. So why does this matter? We want to look into see what the USGS, the Geological Service, to see what prospectivity maps are out there. Are there US basins that are plausible? We want to see ARPA-E field data releases. We want to see the simulation methods how they're working. We want to see any companies that are doing it that have projects that look optimistic, and keep an eye on them. Because once again, this is an asymmetric game, and this is the type of stuff we like. It isn't just, this would have a bit of a difference. This would be material, significant, and profound. So right now, I would say, and this is a bit of a long stream here, everyone. I've gone a little bit farther than I would have liked. Hydrogen isn't a dead end. It's certainly at a crossroads, though. And after 20 years of promise and hundreds of billions of announcements, the hydrogen economy has delivered less than what investors expected. Costs still remain high. Infrastructure is thin, but infrastructure is thin for almost everything except for existing, which is built for hydrocarbons. And the demand is uncertain because, once again, the cost, if it's going to cost you a ton to build out new infrastructure and to get it from the ground and to separate it, they pass those costs along to guess who? To companies, then to us. And that either means we get subsidies and we print more money to support that, or it's you and I fitting further bills with our lifestyle decreasing rapidly. That's why white hydrogen, natural geological hydrogen, has suddenly captured attention. If the Mali discovery proves scalable, it reframes the entire debate, because there'll be a mad rush for any other project that has the possibility of that formation and that process. Instead of manufacturing hydrogen through costly energy-intensive processes, we might simply find it the way we discovered oil and gas. So the question is scale and repeatability. Are there dozens of these Mali projects out there, or just the one? I don't think so. We know that there's a couple other ones. Can we map, drill, and produce these reservoirs safely and economically? That's what needs to be seen. That's what the science, I just said it. That's what the evidence will show. Those answers will determine whether hydrogen remains an expensive science project or it becomes a genuine pillar of this new green transition and economy. And it's important that we keep pursuing it. That's my perspective, because once again, just like the battery metal story, we need to pursue it. We need to get it cost effective. We need to find the right metals. We're in a competition with China, but we also want to develop that technology so that they adopt it. So they stop using coal. They stop using biomass or burning wood, which is far worse. All of these things that aren't as openly talked about. I've spoken too long. But we want to touch on this because it's important, and it's important under the backdrop of a pullback here in some of these gold stocks, which I think is exceptionally exciting. But I like to talk with these ones and pepper them in there because it's my job to stay ahead of that curve, to remind people there's opportunities right this second, but also there's opportunities we need to be paying attention to. And that's why I wanted to come on and talk about this, because there are ones in the pipeline and there's companies we're looking at that could have transformative years ahead. Certainly 2026. And of course, once again, that's a year ahead. The next couple of weeks ahead, we know there's ones with that are going to be putting out news, assay results, further announcements, and some of those stocks have pulled back. We need you to reach out to us, sign up, become a member. That's what we want. And we'll discuss what our model is showing us. Everyone, thanks so much for all the comments, all the feedback. We love it. We appreciate all of your time and effort. And we look forward to continuing that. We'll see you tomorrow. Once again, very interesting. We're going to ask some tough questions. If you've got some too, in the meantime, Andrew at themarketmindset.ca about hydrogen, white hydrogen. We're going to have this element 1 hydrogen on tomorrow. So feel free to write them in live or send them to me beforehand. All the best, everyone. Enjoy the rest of the day. Take care. Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalyst move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book 1 of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, 1 score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book 1 free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday.